All right, what's going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, I'm going to show you 15 of the best stocks to invest in for the long term. So there's a couple things I'm looking for all these companies. And those things are, one, the company needs to be able to grow. Okay, it can't be a company that has pretty much gotten too big where it can't grow anymore. It needs to have a pretty strong moat in a pretty significant industry, a strong industry that should not be going away anytime soon. It needs to have some consistency with what it's already proven to do as far as net income, revenue, return on invested capital, management, balance sheet, all that stuff. And then it probably should have pricing power as well. These are companies that can pretty much raise prices as inflation goes up, and they can keep up with inflation or even beat inflation. So number one on my list is going to be Amazon. I have 15 stocks written down here, so I'm going to try not to spend too much time on each one, but let's just give a quick rundown for each one. Amazon, I think most people are familiar with the different businesses they have. E-commerce, AWS is probably one of the most important parts of their business. And there should be no reason why Amazon stops growing anytime in the next couple of years. And they have pricing power, they have growth ahead of them, they have a moat, they're in good industries, and they've already proven consistency. Next up, we have Google. This one is really just all about the search business as well as YouTube. Those are the two main ones. And you could say something like the search industry could be disrupted by AI and things like ChatGPT, but we have yet to actually see that. And I'm sure Google is going to be at the forefront of a lot of AI technology anyways. So I don't think that's going to be a huge problem anytime in the near future. So number two is going to be Google. Now, one thing I do want to preface with some of these stocks too is just because they're on this list right now does not mean that this is the best time to buy them and they're at some attractive valuation. Just keep that in mind. Number three is going to be Tesla. I mean, the big thing with this one is not all about the EVs, but really about the robo-taxi business, the robot taxi business, and then the energy storage business. That's really the big things to pay attention to there. Next up is one that we do not hear enough about, and I'm not sure if there's a reason it's not in the news more, but nobody talks about this. I have ASML as the next one on my list, and this company makes lithography machines that produce the semiconductor chips. So they are the only company in the world to do this. I believe one machine costs like millions and millions of dollars or something. So this company is pretty much like a surefire bet that all the notice I'm not going to put Nvidia or AMD or Intel on my, or even Taiwan Semiconductor. I'm not going to put those on my list. Maybe some of those could be good to put on here, but I would rather buy ASML. I think this one is it just seems safer. It seems easier because they're the only company that does it. They're at the very beginning of the whole process. These other semiconductor manufacturers, they have to use these machines that ASML produces. So they have pretty much the most important, I don't want to say the most important job, but it's just the moat is so strong that they're in. Next up, we're going to go to Airbnb. This one is quite different. This one has some competition, and it's a little bit different situation than pretty much all these other stocks. But I just feel like Airbnb is the brand name in this space. I see no reason why this should go away anytime soon. I mean, people are always going to travel. They're always going to want other places to stay. I think it's just a good business model to have out there. And, there's other companies like Vrbo that compete, but I just think Airbnb is always going to be at the top, if not either at the top or in second place or something. So that's Airbnb. They still have growth ahead. They're definitely a little bit of a newer company compared to these other ones, but I like Airbnb a lot. Next up, we have Microsoft. This is one where, this is a giant company. This market cap's $3 trillion. So it's like, do they really have that much growth ahead? I mean, I would say yes. I mean, I could see them still growing at probably 10% a year, maybe, for at least the next couple of years. But they just dominate so many different industries, and I feel like I have to put them on the list. You could also put Apple on this list. I wasn't going to put Apple just because, again, they're so big. I feel like they're going to have trouble growing. But companies like this, that their products are in such high demand, they're pretty much just always going to keep, they might not have a giant year of growth ahead of them, but they're going to keep selling products, and the services and subscriptions are going to keep bringing in money. So I guess you could put Apple and Microsoft pretty much in the same boat. It's just they're such giant companies that I don't see a lot of growth ahead of them. Next up, we have Intuit. This is another one where they kind of just, they dominate the industry. They have pricing power. They're in various industries that are just super important, like doing your taxes. And so I just like Intuit a lot. The profitability is high. The ROI for this company is high. And I don't see them going away anytime soon. Sure, there's competitors like H&R Block, but again, I just think Intuit is kind of on top there. Then next up, we have Costco. This is another one that has just been great with proving their consistency of net income, proving how they can keep raising prices. It's continual income for the business because there are people are on the subscription plan, and this stock just continues to outperform, up 218% in the last 5 years. So it's just another good business model. It's something people need. And sure, there's competition. Costco could go out of business. I just don't see it happening. So that's going to be number 8. Next up, we have JP Morgan. This is a good example of one where, like, I would not say this is not a good time to buy this stock. It's at an all-time high. It just wouldn't make sense. But JP Morgan is so locked into the economy. They're the biggest bank. This is a good example of a company that is pretty much bailed out if they ever have any struggles. And it's a bank. It's always going to be necessary, and it's just this is another company that dominates the industry they're in. Then we have Meta. The big things here are, sure, the metaverse and the Oculus and VR and all that, but really Facebook and Instagram is what's driving all the growth and income for this company right now. And I don't think Facebook and Instagram is going away anytime soon. So this company should continue to grow. There's competitors like Snapchat and TikTok, but really they're not serious threats because Meta still has the most amount of users, and it's not easy to make a new social media app and get billions of people to use it. So there's quite a big moat for Meta there. Then we have Adobe. Adobe is similar. I think Adobe is similar to Intuit because it's a software business, high profitability, high ROI. It's a sticky business model where Adobe has a bunch of different types of software and products where people get used to using them. They pay the monthly subscription or yearly subscription. And I don't want to say they're stuck. I mean, they're not stuck using it. It's just, it wouldn't make sense to switch a lot of times. Once you learn how to use all their products and services, why would you switch when Adobe makes some of the best products? Artificial intelligence now is going to make their products even better, and it's also going to make their business more profitable. So Adobe is just another one where people are going to keep using things like Illustrator, Photoshop, and all the different editing systems that they have. So Adobe is the next one on my list. Then we have these next two I almost pieced together as the same company, Visa and MasterCard, just because they pretty much are the same company, same industry, pretty much equally important as far as a moat goes. But I want to say MasterCard has a higher ROI, and the profitability might be a little bit better actually for MasterCard. I'll have to double check that, but I really love both of these companies equally, Visa and MasterCard. They're in an important space, pretty much a duopoly there where there's not really too much competition, and they're just going to keep making money because of credit card fees. So these two, I feel like I have to put them on the list. Then we go to one that you might not expect, and that is Pool Corporation. This is the world's largest supplier of pool products, and they also, I think they sell pool products. They're not like a retailer. They sell them to the retailers pretty much. But they also like redo pools. They do construction. So this is like a business where I don't see pools going out of business or pools going out of style anytime soon. People are always going to get pools, and they're always going to need work done to the pools every year. So it's kind of like almost like a subscription business, not really. But I just really like this business and this business model. They have a good moat because they're the biggest in the industry. So that's Pool. Finally, we have Monster Energy Drink. This is probably one that you wouldn't expect to see either, but it's the same thing. The product is great. It's proven successful for a long period of time. This company was founded in 1990 now, so it's 34 years old, and this stock is just it's proven to look at the growth for this company. So 2004, the stock was 14 cents. Today it's $50 a share. So it's possible that a company like Celsius can put them, I don't want to say out of business, but make Monster irrelevant. It's possible that there's lots of competition. There's always new energy drinks and new caffeine, but Monster has proven to be a dominant player in this space, and I don't see a reason why it would stop. This is a company that probably has pricing power, and with inflation, they can continue to raise prices. So that's why I like Monster. Again, I'm looking for consistent net income growth. I'm looking for high ROI, a good balance sheet, all that stuff. So these are my investment picks for the long term. Let me know what you guys think and leave a comment down below.